Okay, let's focus on the markets now and wrap up the latest on the US markets in particular as we head live to Michelle Schneider from Market Gauge. Hello to you, how are you?
I'm great, how are you?
Good, thank you. We're in Melbourne, Australia, as you probably know, so there's a bit of an issue here. We're just going to find out later today if we are locked down again. Whereabouts are you again, and how is all the lockdown working over there?
Well, it seems to be ignored completely in terms of how the market is performing because there were many factors that sent the market up today once again. One, of course, was some good retail sales that came out. Two is that we have short squeeze with meme stocks on again. That's bringing retail investors back in. Three is that we had the Russell 2000 finally play some catch up and cross over a key moving average. And basically we have more confidence that the Fed is going to keep inflation under control, although I would still be skeptical about that. But today was a good day all around.
That's a good thing. Tell us a bit more about the Russell 2000 for people that haven't heard of that.
Well, the Russell 2000, I think, is probably the most important index in that it has the best representation of what's really happening within the U.S. economy in the domestic U.S. And that's because the 2000 stocks, they're small cap stocks, so their capitalization is a fraction of something like, let's say, Amazon or Apple. But all of the 2000 companies in the basket actually are in the United States. So it's very heavy into industrials and manufacturing. So if that is doing well, it definitely gives you a better sense of security that the U.S. economy is projected to do well. If you see much movement in big growth and mega cap stocks, that's a good thing, but it doesn't necessarily always translate to the U.S. economy. So that's why I look at the Russell 2000 almost as the granddaddy of the whole U.S. economy.
Let's have a look at the tech sector. It's been a little bit up and down of late. What sort of hold have you got on this? Can you narrow down exactly what's happening, or is it a little bit just fluctuating for no particular reason?
Well, the big tech stocks in particular are very interest rate sensitive, and the yields have gone down, although they started to flip actually today a little bit on heading back up again. And the dollar, which was going down, also firmed a little bit near its lows. Whether that's a temporary situation remains to be seen. But what's interesting, though, right now with the growth stocks is that we're seeing money going back to some of those newer tech issues. The stocks that were doing very well in 2020 that fell out of favor as we got into 2021 are starting to pick up. So those newer issues like a Datadog and Palantir and Fastly and Teladoc, Zoom, all those stocks are doing better into this rally. And the small cap growth stocks, which also were doing incredibly well, have now turned around and has starting to show some basing action. So we're seeing a rotation back into these areas, which I think is a good sign, because the dinosaurs like an Apple and an Amazon and Microsoft are good when they hold up, but not really going to be what gives this market excitement and gets the retail investors to really want to come in and start buying across the board. So that's what's really going on with big tech right now.
Let's wrap up by talking about the crypto universe. We always have to touch on it. Of course, the last week or so has been pretty remarkable to watch. Bitcoin has pulled back slightly. What have you seen? What have you made of the past week or so?
Well, I think the biggest boost to the crypto market was, again, Elon Musk. I hate to think that he's that influential, but he is, talking about now working with the mining companies to develop more green-friendly mines in North America. So that gave another boost. But there's been other news. PayPal is allowing people to get money in Bitcoin. And, of course, the institutional Michael Saylor that's still coming out and saying he's very bullish. Cathie Wood still insisting on going to 100,000 or higher in Bitcoin. So I think what's happening here is we're starting to see the volatility come back in again. And as long as we sit, if we're looking just at Bitcoin, between 37,000 and 40,000, we could see another leg up. Overall, the picture is still very bullish, but this volatility, when it gets highly leveraged, of course, becomes a concern, and then people pull back.
Michelle, always great to chat. How can we learn about your work? I know you're on Twitter and the social media accounts. Where can we check out everything you have to say throughout the day over there?
Thank you, Adrian. Well, Market Minute is my Twitter handle, and I'm on there all day long. If you go to marketgauge.com, that's our website. If you go to the media tab, you get to see a lot of the clips that I do where I give very specific trade recommendations. But really the best thing is to just ask me on Twitter. That's probably the best place to see me because I'm there a lot, maybe too much.
All the time, all the time. Hey, great to chat. Enjoy the rest of your day. We'll talk really soon.
Same. Thank you.